Hello guys, I hope you are doing excellent. So we are going to start with today's session, which is going to be about budget management. So let me introduce myself first. My name is Mario Paz. I'm currently GFBKMC member, and you can also contact me at my email number, my email, and also my WhatsApp number. So let's take a brief look at our summary. So today we're going to learn first about the budget management introduction. Then we're going to talk about the budget benefits, principles, and planning, which are three important topics regarding the planning, execution, and control of our budget. And finally, we are going to present you the budget tool, which was created by the Global Finance Board itself. So I really hope you like this tool that we have prepared for you, and hopefully it will be standardized and implemented among all of the AIESEC entities. Cool. So let's start with what's a budget. So a budget is an estimation of the revenue and expenses over a specified future period of time and is compiled and reevaluated on a periodic basis. So it's essentially a business plan for the short term, especially at AMC and LC experience because our terms are just for 1 year, and it's likely to be expressed mainly in financial terms. Most of the managers, in this case the MC members, see this activity as one of the most important in which they get involved. So remember that the budget creation should be not only responsibility of the MCVP finance and legal, but also responsibility of all of the MC, because they should be accountable for their own budgets. We should consider the purpose of budgets and how they fit into the decision making and planning process. And usually the budget is built with Excel. So, like in this case, the tool that we have prepared for you it's actually made in this platform. So, why do we need a budget? Remember that budgeting is actually one of our six finance standards. So budgeting actually makes sure that we can sustainably achieve our plans and keeps us accountable. Because without a budget, you're like a pilot in dark. So this metaphor actually says that a budget is very important for us, especially in AIESEC. When we talk about AIESEC as a social enterprise, we have to guarantee that our exchange goals have to be translated into financial goals in order to guarantee that we could have enough resources to keep doing the leadership that we promised to do. So, how does it help a budget us with? So, a budget and how to budget and budgeting processes should like. So, this is actually what we are going to learn today. How is actually a budgeting process, and we are going to have very deep uh, introduction and a very deep journey regarding how to make a good budget. So, we have to take a look at some of the checklists and some of the important things that we have to consider while making a budget. So, first of all budgets are planned before the term starts. So, we have to guarantee that our MC budget tool has to be done before the MC term starts, and the same applies with the LC experience. Real budgets are reported to the MC quarterly and to the EB monthly, so remember these criteria regarding accountability of the budget. The budget should be approved by the board, so in this case, if we are talking about MC, it should be approved by the board of LCPs, or considering the internal governance of your entity. Every budget should be updated at least once per month, and that's why the budget actually has a monthly structure. The replanning of the budget is done every quarter, so we could take a look at the past and see what opportunities could be applied for the next quarter. Every project that has a turnover above 50% of the LC budget needs to have a separate budget, especially when we talk about huge conferences that represent more than 50%. They should have their own budget because they need to have a specific control, and they need to have a specific budget management because they have a very relevant financial amount of money. And finally, the three points that we have to take into account is that the new customer flow should be implemented regarding the payments. The budget should be planning profit, which is very important. We have to guarantee that at the end of our term, we should guarantee that our entity is actually sustainable and having enough resources to keep going. And finally, all of the prices in the entity have to be aligned. So we have to also coordinate the pricing structure, and it has to follow the structure and the decision that we made regarding our exchange products. So, what are the benefits of the budget? We consider five. The first one is to promote forward thinking and identification of short term problems. As I told you, budget is made in short term and it has to be filled every month. It has to help us to coordinate the various sections of the business because the budget consider operational and non-operational information. It has to provide us a system of authorization and also a basis for a system of control because budget is not only about planning but also it's about control and the execution and how we are actually looking the achievement of our goals, not only exchange but also financial. And finally, the budget should motivate the managers, in this case the MC or the LC members, to a better performance. Cool. So we also consider three budget principles. The first one is the precautionary principle. So what does this principle actually mean? That we should always only overestimate the cost and only underestimate the revenues. So this actually means that, taking into account the precautionary principle of finance, we should have and we should consider the worst case scenarios and also how we could guarantee that even in not very good scenario we could also still performing with profit. Cool. The second is the accrual principle. So always we should put the costs and revenues to the period when they were created. So for example, if we received an invoice during the month of February, it should be put and it should be registered in that specific month. So that could follow the correct structure, the correct timeline of the actual income or the actual expense of this specific item. Cool. So it's very important because this accrual principle is also an accounting principle that we should always have to guarantee that could happen in order to have a very well structured process of incomes and expenses in our entities. And finally, the matching principles. So we should always report an expense of its income statements in the same period as the related revenues. So of course, if we are talking about something that's incoming, it has to have the balance and it has to be in the count of the outgoing at the same period of time. Cool. So we also have a a graphic regarding budget planning. So this actually is a virtuous cycle. So this should be a cycle that should be executed every quarter in order to guarantee that our budgeting process is been following every single quarter regarding the replannings of the ANSI budget. So first, we'll start with the setting of the goals, where we need to know how the budget looks like, what are our exchange goals, cool. Then we have to gather data, so we collect data, explain of this process to the MC or the LC, so we can consider which are the planned expenses, how are the accounts that we are going to take a look, what are the expectations that we have regarding the incomes that we are planning, the operational and also the non-operational incomes that we plan, the analysis of the data and the creation of the plan. So this is where we actually take and we reunite with our MC, our EV and create together the budget. Then the implementation of the plan. So this is where we actually start to implement the budget. We follow what was actually planned, and then we have to monitor the plan. So the part of the monitoring is where we control the monthly execution of the expenses and also of the revenues that we have. Cool. So let's go to the tool, the GFB budget tool that we have prepared for you. So we are going to present to you this amazing tool that we created in order to make budget easier and more standardized for every entity in AIESEC. So this is actually the MC budget tool, and it's actually a tool that was created by the Global Finance Board, and it has some tabs. So I'm going to explain to you all of these and how we can use these tabs correctly. So the first one is the data tab. So it contains the general information about the entity. So in this case, we have to put the name of our entity and data regarding the MCVP responsible, the finance and legal MCVP. So here I put my data for the example purposes. So then we are going to go to the general data. So in this part of the general data, we are going to take a look at the exchange goals that we have. So these are the exchange goals that were made by our MCVP operations, and also we are going to fill the general data of our entity. So first we can take a look at the sale price. Here we're going to fill what's the sale price of each of our 6 exchange products. And then we have to put the bank account initial, which means what's the amount, the initial amount that we have in our bank accounts, which is important because it's going to represent the final amount that we have during the last day of the last term. So this is actually the amount of money which we are starting with our term. And we have the consolidation of the opens, approvals, and realization goals in exchange numbers, and also per every single of the product of the exchange products. So how do we fill these? We have to coordinate with our operational MCVPs to fill with their operational exchange goals for every single month. Cool. So we're going to have all of the data regarding opens, approvals, and realization of the exchange goals per exchange product, and we are going to have the first step completed. This part is going to help us to create the financial the financial analysis, and also it's going to help us to track not only the financial goals but also the exchange goals at the same time. Cool. So then we go to the third tab, which is the revenues budget. So here we are going to fill with all of the information regarding what's planned, taking into account the GFB structure. So we start with the direct exchange revenues. So what are we going to fill here? So we're going to fill first all of the direct exchange revenues of each of our 6 exchange products. So for example, we are going to consider the EP revenues that we have, so we are going to fill here. Cool. We are going to fill the direct exchange revenues for OGE, they are going to be filled here, and so on. Cool. So this first part of the revenues budget actually is made to guarantee to track the financial performance of our exchange products regarding revenues. So this basically is how much we are planning to have and what's the amount of income that we're planning to have from each exchange product. Cool. The second part is regarding the BD, and partnership revenues. So here we are going to talk about with our MCVP BD or PD, and we are going to say and take a look about what are the planned revenues for BD, CR, or partnership revenues. We are going to do the same with YouthSpeak. So we have planned a YouthSpeak during our term. Here we're going to put what's the amount of money that we are planning to achieve. For example, let's say that during the month of May we're going to have a youth peak, and we are going to have a revenue of 20,000 euros. And also in sales, we are going to have sales during the month of April of 10,000. So of course we have to fill this here. Then we have the section of the local volunteer revenues, which actually is not a very common section, but let's suppose that our entity is actually planning to implement local volunteer and you have a financial plan for this, so you're going to fill this. Then we have the section E, which is regarding conference and meeting revenues. So here we have to fill with local, national, and also international revenues regarding conference. So if you are, or if your entity is going to have a national conference, here you are going to put all of the amount of money that you are planning to have as revenue. And if you are going to be maybe the host of an international conference, here also you are going to fill with the information that you have for this specific conference. Cool. So basically this is it for the conference and revenues meetings, and it's very important for you to take a look at not only the general but also the individual topics. And also in the tool you're going to find some kind of comments that are going to help you to understand better what you should feel regarding each of these items, so it's going to be more easy for you to make a better recognition of the revenues that are planned. Then we have the entity affiliation fee revenues. So here we're going to write what are the planned revenues that we have per exchange product, because considering the internal or the national financial model, here we're going to plan what's the amount of income that we are going to have as LC contribution. So for example, we are going to plan that as LC contribution, the variable fee for OGB it's going to be for each month. I'll let a random number between, let's say, between 1,000 and 5,000. Cool. So this is where we are going to fill this information. And we are going to do the same with all of the other information. So it basically it's going to look like this depending on your financial model structure. Cool. So here is very important to have the plan of the LCs. So the entity affiliation fee revenues for an MC is basically how much we are going to obtain from the LC contribution that could be expressed in a variable or fixed amount. Cool. Then the point G is going to consider the sponsorships and donation revenues. So here we're going to put all of the information and all of the revenues planned regarding donation of companies, people, government, or sponsorships that we may have planned. And finally, in the last section, we are going to put the information regarding other revenues. So what are we going to fill here? All of the other revenues that actually are not maybe explained or they are not contained in the other items, such as the ones that were mentioned before. So for example, if we have interest earned planned for our bank accounts, we can put them here. And if we have reserves planned as incomes that we may have in a separate account, or other kind of revenue that we may have planned, it's going to be here. Cool. So this is how we basically fill the revenues budget. It's actually easy. It's not as hard as it may look. If you create and if you do this with your team, with your commission, with your MC members, it's going to be even much easier. And finally, we are going to have the consolidation of the revenues that follows the GFB report. So here we're going to find all of the information that was presented above, but resume into the GFB structure and the revenues structures in the GFB chart of accounts. So here we're going to have the total of incomes of revenues per month and also the total general and grand total of the whole term. Cool, so now let's go to the cost budget section. So the cost budget basically is very similar to the revenues budget, with the huge difference that actually represent the output that we're going to have, all of the costs, the expenses that we are going to execute during the term. So first we have to direct exchange costs. So here we can do and create in synergy with our MCVP operations also what are the planned costs that we are going to have per each exchange product. So here we can see that each exchange product has their own items related exchange cost. So here we're going to clarify and here we're going to talk with our BP's operations about how much we are planning to expend regarding every specific topic to guarantee that our exchange goals could happen. So we're going to do this for OGB, for OGE, for OGT, IGV, IGE, and IGT. And some points that I consider important is that, for example, we consider here the ICB or the ECB cases. I think it's very important to have a budget for these specific points regarding quality cases and standards that we may have in the future. It's also very important to guarantee the correct delivery of the standards, which are non-negotiable costs that we have to do. So, of course, it's very important to have these specific items very well aligned with our BP's operations, so they could know how much actually they could spend as a maximum in order to not have our expenditures and to achieve correctly our budget expectations. Then we have the same structure regarding cost for BD. So here we're going to put all of the items with in synergy with our MCVP BD. So we are going to talk about materials, transportation, delivery, advertising, calls, etc. Then if we have planned a youth speak, here we're going to put all of the expenses that we may have for youth speak and for the execution of this event. So here we're going to fill this information as the example. Then we are going to have the section for local volunteer. We're going to do exactly the same. So here we're going to fill all of the information regarding local volunteer and the execution of this program. Then we are going to put all of the information regarding conference and meetings. So for example, if we plan to have a venue, we are going to rent a venue during the month of May. Here we're going to fill this information, the materials that we may have for a national conference and also for an international conference if we are going to host one. Cool, the advertising, and we are going to fill out that information here. Then we have the overhead cost. Please, we have to be and we have to take this account very seriously because the overhead costs are probably one of the most important cost accounts, because these are include very specific and important items. So first we have the overhead cost of office. So what are we going to fill here? The office rent, which is something that many entities actually have, which is a fixed cost, the electricity, water, the internet office. So all of the overhead cost office are all of those costs that actually are important and that we have to execute to guarantee that the office could have enough supplies, enough services to keep on delivering the MC services. Cool. So here we're going to put all of the information regarding overhead costs, like internet, like electricity, like insurance that we may have for the office. Also here we're going to put all of the software that we could manage. For example, if we paid for an accounting software, or if we have to pay for a monthly bank fee, here we're going to also register this information. Cool. Then we are going to have other type of overhead costs, which are the HR costs. So these costs are related to the development of the people, are related to the experience of the MC or the LC, and the utilities that we may have to guarantee the MC or LC experience. So here we are going to put a very important topic, which is the MC salaries. So this has to be also aligned with the MC. If we, for example, pay a flat, here we are going to register the flat rent. If we have any other flat costs like maintenance of the MC flat, general travel, for example, for specific specific situations, if we have lead trainings, or if we have team days planned, here we also are going to fill the information of our budget for those events. Cool. Then we go to the overhead cost regarding legality. So these are all of the legal and the compliance information and costs that we have forecasted. So here, for example, if our entity has a lawyer that we have to pay for their services, here we're going to put all of the cost of the lawyer. If we are planning to have the external audit, here we're going to put the months and the cost of the audit, the taxes, which is something important. If your entity actually pays taxes, you can use a formula if you want of the calculation of the taxes, because taxes may have different from entity to entity. So here we're going to consider these random numbers for random taxes examples, and the visa procedures. If your NC members need some kind of reimbursement, or maybe you have to invest to guarantee the legality of the MC members or other stakeholder regarding visa. Cool. Then we have the other two overhead costs, which are the national conference traveling and also the international conference traveling and visa. So these costs are very important because when we consider how much we are going to expend regarding national and also international conference, like regional conferences, operational summits, the international conference itself as IC or MCP summit, which are non-negotiable costs, we are going to put all of these investments here. So, for example, let's say that regarding international conference fees, we have to plan how much we are going to invest in our MC members for these international conferences, and also we have some national conference fees that we are going to invest in, that we have planned for this month, and also we have to pay for some tickets for our MCVP, for example. So we are going to plan all of this information here. So let's go to the other topic, to the other item, which is the entity affiliation fee cost. So here we're going to register both the AI fee and the regional fee. So as you know, the AI fee actually is paid only twice per year. So here we're going to put how much actually was calculated for our entity to pay regarding AI fee. Let's say, for example, we are going to pay 20k during the month of June, and during the month of January we have to pay 15 or 20 also. All right, to make it more realistic. And then we are going to put the renal fee, so we are going to put another example here. So basically this is what we have to fill in this place. So now let's go to the PR cost. So here we're going to talk with our PR MCVP, and we are going to look about we are going to see how much it's planned to spend regarding public relation costs. Maybe we could have some transportation tickets for the PR sales, or maybe we have plans on advertising during some specific months, or the delivery to our partners. So we are going to fill this information here. And finally, we are going to fill information with other costs. So what are we going to do here? We are going to put all of those costs that are actually not included into the other items that were explained before. So we're talking about contingencies, interest, other costs regarding other events that we may have, other services that our entity should have provided, or other costs that simply don't fit in any other item. So we are going to put those here. So finally, our costs budget is actually done, and once we have all of this information filled, we are going to have the GFB report structure and the consolidation of our costs that follows the GFB structure also, and have the total of the costs per month and also the grand total of the whole year. Cool, so we have already finished our revenues budget and our costs budget. So now we're going to take a look at the forecast. So what's actually the forecast? How actually is the result of our planned budget? So that's information. We are going to see that information here. So first, remember that when we talk about finance, we also have to talk about scenarios, because of course the budget that you plan, it's almost impossible that it's actually going to finish being 100% exactly how you plan it. So in order to play with numbers and with scenarios, here in the general projection part, we can actually maybe change the expectation that we have for revenues and for cost. So here we could have we could actually play with the percentages. So for example, let's say that how could we take a look about the revenues if they are only achieved at a 70%, and if the costs are only achieved in a, let's say, 50%. So actually this part here is going to help us with scenarios. Let's go back with the 100%. So I consider and I really recommend to have a moderate scenario, which could be maybe 70%. If we also want to guarantee that we are taking into account the risk management in our budget planning. Then we have the product net income. So this part here actually is going to tell you how much is going to be the total expenses minus the total the total revenues minus the total cost per exchange product. So if the number is actually negative, this means that this particular product is actually going to create loss at the end of the term. So we have to guarantee that every product should be sustainable, which means that they should end the term generating profit. All right, so these numbers should actually be positive and should actually be green numbers. Cool. So then in our forecast indicators, we're going to find first the cash flow forecast, which means how much we are going to end the year, and the profit and loss forecast, which means how much profit or loss we are actually going to make during the term. And finally, the core performance, which indicates what's the percentage of incomes that we have. Cool. So, in this cash flow forecast, first we're going to see what's the result of our forecast per month. So here we're going to take a look if our cash flow forecast is good each month, and the final forecast is how much we are going to plan to end, with how much we are going to plan to end the term, which in this case if is 233k, which is a good number. But if we take a look at this example, it's actually this number actually is less than the initial number, so you don't have to follow this thing. Actually, the good and what should be expected is that your final number should be above your initial number, right? And then we have the profit and loss forecast. This part here follows the profit and loss structure which is accepted by the international finance and accounting principles. So we have to follow the profit and loss forecast, and here we are going to see how much profit or loss was made for each month, and what's the profit or loss that was made for the whole term. So in this case, the final profit and loss was 40k, which means that actually the entity ended up with profit, which is good. Cool. So then we have learned the planned part, all of the budget, and what we are going to do each month is to fill the same information but with the real information. So we understood how to fill the revenues and the cost budget. Now we're going to do the same but with real information. So in the revenues real and in the cost real tabs, we are going to fill all of the information with the real with the real numbers on the real execution of the cost and the revenues of the entity. So what we are going to have in the next tab is the execution of this actual real revenues and costs. So the budget execution tab is going to tell us how much actually was executed. So what are we going to do here? The first thing that we have to do is to fill with our real goals execution. So in the general data tab, we had the exchange goals numbers. So here in the execution tab, we are going to fill with the exchange real numbers per exchange product. Cool. Then what we are going to fill here is the same information that I already explained you in the forecast section, but with the real information, with the real execution. So we're going to fill the real cash flow execution, and also we are going to find the real profit and loss execution. So finally here we are going to find the real product net income per exchange product, the real cash flow forecast, the real profit and loss forecast, and the real core performance of the entity. So it's very important because as I told you before, the execution is almost never going to be the same as the planning, as the forecast, but it's always very important to have both informations correctly. So one, we are going to do the forecast during the planning, and the execution, it's going to be done during the execution every single month of our term. So at the end of our term, we should fill the information of the revenues real and the cost real of our entity. Cool. So let's go to the other tab. The other tab is the balance sheet. So what are we going to find here? The balance sheet is actually going to help us to take a look at a picture of the reality of the entity on a specific period of time, right? So the balance sheet is going to follow the same structure as the GFB chart of accounts. So first we have the assets, which are the things that we actually have. So in the assets, we have to fill with the cash and equivalent items, which is the bank account and petty cash. So we have to fill the information at the final of the month of how much we had in our bank account and petty cash accounts. And we have to do the same with the long-term assets. So here we're going to fill with long-term assets as reserves of property, or if we have financial property, so we are going to fill this information here. We're going to do the same with receivables. So for example, if we have receivables with other AIESEC entities or partners, we are going to fill this here in long term, which means that it's in a period that's above, that's more than 1 year. And also if we have short-term receivables, we're going to fill this information here. So for example, if an entity has a debt with the MC, or if for example we have an MC member that is having a debt with the MC, we're going to fill this information here. So we are going to have the information of the total assets here, and then we are going to go to the liabilities. So here we have two kinds of liabilities in AIESEC: the long-term liabilities, which are those that have a scope of more than 1 year, and the short-term, which are those that are within 1 year. Cool, so we are going to fill up this information if our entity has a debt with another entity, or if we have a debt with a partner, we are going to fill that information here. So finally, we are going to have the equity information, which is actually the difference between the assets and the liabilities, and this helps us to balance and to have our balance sheet balanced. So why is the balance sheet important? Because it's actually going to help us to understand the financial situation of the entity in a specific period of time, and also it's going to help us the composition, the structure of our entity with financial information. We also made another another part here, which is about depreciation. It's very important in the calculation of the profit and loss. So we have to feel this depreciation part because it's a financial concept that help us to understand what's the value of our fixed assets through time. So here what we are going to do is that we are going to classify the assets, the fixed assets that we have in if we have buildings, machinery, office furniture, transport vehicles, or computer equipment. So what we are going to do here is that we are going to put the initial values of these if we have these kinds of fixed assets. We are going to have a rate depending the national law, or depending what's the rate of depreciation. This actually information actually should be in percentage, and the tool is going to help us to calculate automatically the annual depreciation and also the monthly depreciation that follows the linear the linear depreciation, which actually we're using here to calculate this concept and to have a more reliable profit and loss calculation. Cool. So let's take a look at the other tab, which is the product performance. So what are we going to look here? The product performance tab is going to be focused in our exchange performance, but not only exchange, but also the exchange financial performance. So we are going to look here in the product performance, the product sustainability resume. So here we're going to take a look of the total incomes and the total expenses of each of our exchange product, and the net income if it was positive or negative per exchange product. Also, we are going to take a look about what was the revenue per exchange product. So, for example, in OGB, we actually can see that this product had a 18 euros of exchange per realization. So this means that our product is sustainable. So in this case, for example, if OGB had a bigger amount of expenses than incomes, this would mean that actually our product would be unsustainable, right? So this is actually very important. This is going to help us to understand how sustainable or not or unsustainable our products are. So here we are going to guarantee that the products are having more incomes than expenses and therefore are achieving the financial expectations. And then we are going to have the financial goals per product. This is the comparison within the plan and achieve. So here we're going to find the financial forecast of each exchange product and also the achievement of the exchange products. So for example, in this case, we can see that, for example, OGB had achieved a bigger amount of money than what was planned. So actually, it was an overachievement of the financial goal, and the same happened with all of the other products, which actually was good. We can take a look at this in percentage. So this is the achievement, or in this case, the overachievement that we have per exchange product, which is actually very good. And we take a look at the same information we have. We can find the same information that I told you before, but with graphics, which may be more visual, especially for the people that may need this information for the reports preparation. So we have the net income. So here we are going to find the same information but in graphics, which is going to be more friendly from a visual perspective. Then we have the part of product analysis. Here is a resume of all of the revenues and costs per exchange product. This table actually helps us to calculate the information above regarding product sustainability and also the exchange performance, and also help us to calculate the revenue per exchange, which is an indicator that tells us what's the unitary amount of money that was earned per exchange product. So if in this case this number would be red, that would mean that that product in particular was actually unsustainable. And finally, we have the level of sustainability information. That means which level actually our entity is. So we find here the sustainability level 1 and the sustainability level 2. So here we are going to find what's the level of sustainability. So if this indicator is actually negative, this means that the product itself hasn't achieved the specified level of sustainability yet. So this tab I recommend very much to be shared with your MCVP's operations. This tab should be very, very well known by your operations mates and your operation body, so they could be accountable for their products' sustainability. Then let's go to the other tab, which is actually almost the last one, which is regarding financial analysis. So what are we going to look here? So basically the financial analysis tab is like a resume of all of the main financial indicators and all of the information that we actually collected and filled in the other tabs. So in this financial analysis tool, we are going to find first the general analysis with general financial indicators. So we're going to find here the total exchange deliveries delivered and the exchange goals achievement, which is in exchange goals, the percentage of achievement. Then we're going to have the current cash flow and the cash flow achievement, which in this case was in overachievement, so how much we achieved from what was planned, and the same for the current profit and loss and the profit and loss achievement. So this is the financial performance indicators. Then we're going to have the product performance. So here we're going to find the product net profit, and also we are going to find the product financial goal and the core performance. And also we can take a look at the months of financial reserves, which is a very important indicator too. Then we have a graphic of the cash flow performance. Here we can take a look of the comparison between the cash flow projection and the cash flow execution. And also we have the other chart, that's the comparison between the net profit projection and the net profit execution. This is actually very important because the recommendation here is that our cash flow executions should be always above or at the same level as the cash flow plan, which means that we are actually having a overachievement. And here we can also track what was the financial performance of our entity through the years in a more visual friendly way. Then we have the part of cash flow achievement. This actually is going to show us the percentage of achievement of the cash flow per item and per month. So for example, in this case, we are going to see, if we want to take a look at the month of July, the achievement of the direct exchange revenues in IGV was this. So this was the percentage of achievement. But for example, we can see that in the month of, for example, of November for direct exchange costs and OGE, actually the achievement was 49%, which actually was -1. So this is going to help us to track the cash flow versus the cash flow projection versus the cash flow execution in percentages. Cool. And finally, we have two graphics. The first one is regarding the revenues performance, so we can take a look about of the revenues projection and the revenues execution, and also the distribution of the revenues regarding all of the kinds of revenues. And the same applies for the cost performance. So here we can see the graphic on which ones actually were the costs that represented the biggest percentage regarding the total cost. And finally, we are going to find the key indicators that are also indicators that we manage and that we can see them the GFB reports. So we have the core performance, revenue per exchange, net profit within sales, working capital ratio, debt ratio, the current ratio, long-term receivables, and total assets, liabilities within total assets, and finally the months of financial reserves. So these are the key indicators that we have here. These key indicators actually help us to understand the financial situation. These key indicators also help us to make financial decisions in order to guarantee the sustainability of the entity. For example, if we want to take a look of the net profits on sales, here we can say how much our total sales, in this case the direct exchange revenues, are contributing to generate profit and how much of these sales actually become profit. So in this case, we can see that the amount is kind of low. So what is our recommendation here? If we want to know if an indicator is good or bad, we have to make comparisons. So these indicators should actually help us. It wouldn't be they are going to actually be valuable if we make comparisons, if we compare this data, if we compare these indicators with other financial indicators from other entities or for other months, these actually are going to be useful for us if we use them as that. So cool, finally we finished this tool with the last tab, which is the GFB report tab. So here we are going to find the GFB report structure, as we have to present this GFB report monthly. Here we are going to have the consolidation of the GFB report per month and also per GFB account. So this actually is going to be very useful for you, because you are only going to have to copy this information and to paste on the GFB report tool. So it's going to help and it's going to be very useful for you MCVPs to have the consolidation of the data and to guarantee the accomplishment of the GFB report criteria. So this is it. Basically, this was the briefly or not so brief explanation of the budget tool and the session that we had today regarding GFB budget tool. Of course, if we want to learn more about budget, we should take a deeper look at this tool and we should take a deeper look at the budget information that we presented you. But of course, if you want to know more about budgeting, you can feel free to contact me. This is my contact information or any other of the GFB members. I feel very happy that this information, if this information was actually helpful for you. So thank you very much again, and have an incredible day. Thank you.